BOQ's been pretty uniquely placed in that the last few years, we hadn't operated in the broker market. I think 3 years ago, less than 2% of our flows were out of broker, and clearly the industry's moved on rapidly. A few years ago, we announced we were coming back into the channel, and we've made real inroads. North of 20% of the bank's mortgage settlements are now from third party. What that's required us to do is really focus in on how we can be different, and in a sense, the broker channel is the ultimate test of whether you are getting that right for a broker to give you their next dollar or the next deal. We've really focused in on our service proposition, built a local broker processing unit. We make our BDMs very accessible. Any of those groups are able to take calls from brokers, find out status of deals and where things are up to, and also really invested in behind some of the technology to make getting deals through BOQ easier. And as I said, pretty satisfying to see those results flow in. Virgin and BOQ, they're quite complementary strategies. We know, the Virgin brand, it's already got a pretty large customer base, 250,000 customers acquired across credit cards and lighter touch consumer products. But the real opportunity is in deeper relationship products like mortgages. And as I said, quite complementary to BOQ, that it attracts quite a different target customer, but it's a powerhouse of a brand, a real challenger, very successful in the UK. A lot of it really resonates from Richard himself being an entrepreneur, and that seems to capture the imagination of people. The plans for the business were always to move into products like mortgages, and first cab off the rank, first quarter of 2016 is a mortgage. It's going to be offered through the broker channel. We're working through our plans around that now. But again, given BOQ hasn't played heavily in broker in years past, and it's a key area of growth, it makes sense for us to go to market with a Virgin product through broker, and hopefully seen as a strong signal to the industry that we're committed to it. It's an interesting question. I think the investor market will continue to moderate, and so owner occupier will remain competitive. I think Australia is pretty unique in that geographically, different markets operate in different ways. The Perth market is obviously in conditions that are quite different to Sydney and Melbourne. I think the fundamentals of the economy remain pretty strong, and I think people forget. I was in the US a couple of weeks ago talking to some investors, and they're very focused on the unwind of the mining investment. I think the part that's lost in that is the pillars of the economy were really, the likes of tourism and education, highly linked to the Aussie dollar. As that comes off, they're the sleepers in the economy that can really get going. And we know when consumer confidence is strong, unemployment stays low, and the property market continues to steadily increase, there'll be a real opportunity. But to answer your question, my expectation is investor continues to moderate, and owner occupier remains a bit of a hotbed of activity.